Today is Thursday, January 26th. Having a little problem with the microphone, so I hope the sound is okay. I want to go over a couple of things with the Dow 20,000 column and why the New York Composite Index is a more meaningful breakout from yesterday. I wrote about that in my column for Barron's, so I want to go over a few things. Got a little more time to look at more charts here and explain what I'm talking about. Here's the Dow. There's 20,000. You can see we could draw a little trading range here, just under 20,000. And you can see that, well, it's a nice little short-term trading range. It's not very wide range. And if you were to look at this on a point and figure chart, you wouldn't see a whole lot of action here. So it's not that significant. Whereas something like over here, a lot of price movement as it makes its turn. So that would be much more significant on a point and figure chart. Now let's go into the weekly format. And you can see it's getting less and less significant here. You know, it's just a bump in the road. All right, here you can see the top in 2015. You can see a lot of congestion, but the range a little bit bigger than you can see over here the past month. So it's more important. And if we even go into the monthly format, go way back in time, forget those lines, that's from a previous video, you can see that this was a real turning point. Here's a real turning point. And there is the range, just barely making it past the 1 month or 1 bar here. So not a very significant level in terms of resistance or support in terms of the big picture. That's a big picture number. That's a big picture number here. I think you're getting my point. There, it's really just maybe a bump in the road. And looking back in time, I mean, I'm sure there were a lot of little ones in here that were just speed bumps. Maybe this was a speed bump at one point. Anyway, I'm not here to bash the Dow 20,000 people who like it. Just saying that it's a short-term thing, and when Dow first got there in December, it was meaningless in terms of actual support and resistance. Now it's developed into a short-term support right now. So there is meaning now, but there wasn't any when it first got there. All right. I've also written a column for Barron's that Dow 21,000 is a little more significant, a little more meaningful. Let's get rid of some of these lines. Oops. And just putting lines on the chart. You know, this is not very scientific. I'm just eyeballing a lot of things. Parallel line here. And you can see that. So that's from another video, but it's meaningful. There's around 21,000. So if it hits there in a couple of months, then I'd say, well, there's even more reason to think that's a meaningful round number. Whereas 20,000, I don't think was that meaningful. Now let's go back into the New York Stock Exchange Composite. Well, first the S&P, you can see the similar trading range there. The NASDAQ, the NASDAQ doesn't even have that range. It kept going higher and higher. All right, but if we go to the New York Composite, all right, sure, it looks like it has the same type of range there. Get rid of some of those old markings. But look at the difference here. This is the 2015 previous all-time high. Right at the top of that. So this is a far more significant resistance, former resistance level on the New York Composite than it was for the Dow. And just for comparison, let's go back to the Dow. And you can see, let's get rid of these extra things. The previous high was way down here. So you have a short-term breakout. I'll just drag these down, just don't have to redraw them. You have another type of trading range in here. But in the big picture, this is the breakout. This is just a few days after the election. That's your big breakout on the Dow. And since that time, it had been at or near all-time highs ever since. Whereas the New York Composite, just now moving into all-time high ground. So I think this is a far more significant breakout. I know it's being hidden by Dow 20,000, but this is the real breakout. This is showing me that, yes, we've got a new bull market happening here. Again, I don't want to say it's going to go on forever here. Nothing ever does. We're very far into the market from 2009, 8 years or so. So I don't want to say it's going on forever. I think it's pretty old. and maybe all this optimism we're getting now is going to wear off, or has given the market its final push. But for now, in the short term, I kind of like the stock market. I know I've been bearish all along, but that changed the election. This is a technical change right down here, not just because of who won. It's what happened to the market after the election happened. So it's not about the person or the administration. It's about what the market did in reaction to what happened. So there you go. There's a little bit more in depth on why I looked at the New York Composite versus the Dow, and how Dow 20,000 is nice to say, but the New York Composite, I think, had a far more meaningful breakout.